Hey everybody, it's Joshua Phillips here with Churchill Mortgage. I'm sending this out on behalf of not only myself, but my wife Amy, my son Jesse. We're the Phillips team here at Churchill Mortgage. If you're working with the Phillips at Churchill Mortgage, you're in great hands. Well, as you see in the title of today's video, we're going to be talking about the Fed fund rate and possible Fed cuts. But before we get to that, just really quick here, I want to show you we're currently using Bird Eye for our reviews from clients. I just want to point out, I want to brag just a little bit. 4.9 stars from 645 reviews. That's how many reviews I've gotten. You could also go to Google reviews, check my reviews there. That's going to be under Phillips team at Churchill Mortgage. Amy's got a ton of great reviews as well. Just a little bit of social proof that we do a great job for our clients. We've been doing it for years. So just so you know, you're in great hands. All right, let's get to the Fed fund rate. So I'm going to pull in some Chat GPT today here. So I asked Chat GPT, is the Fed fund rate, it's the same thing as mortgage rates? Because, the Chat GPT is quite smart. So the Fed fund rate is an interest rate in which banks lend money to each other overnight. Overnight, one night, lending each money. It's a short-term interest rate. It's a benchmark. And it says it can influence mortgage rates, but they are not the same thing. So I just want to get that out there first of all, because there's a possibility the Fed might finally do a rate cut next week. If not, it's pretty sure we're going to see one later this year, or start seeing Fed cuts later this year. But we got to be careful. I know my phones tend to ring off the hook when the Fed starts cutting the Fed fund rate. But if you can walk with me here, we're going to go through some different information on these screens. So, all right. So I also went into ChatGPT and I was like, hey, what were the dates that the Fed cut the Fed fund rate last year? They cut it 0.5%. September 18th, and then November 7th, and then December 18th. So last year in the third or fourth quarter, we saw the Fed cut the Fed fund rate 1%. Wow. Well, surely mortgage rates went down 1%. Well, let's look at this. Remember that date, September 18th. We're going to come back to that a couple times. September 18th. Now, this is something called the Primary Mortgage Market Survey put on by Freddie Mac. They've been doing it for like 50 years. This is probably some of the most accurate data you can see here. All right, so clearly we can see over the last 5 years, mortgage rates going up, from where we were in the threes, and then we got up to, kind of the highs. But what happened September 18th, the Fed cut the Fed fund rate. What happened to mortgage rates? They actually went up. Over the next few weeks, they went up, gosh, quite a bit, like almost a full percentage point. So all that to say, the Fed cutting the Fed fund rate is not going to necessarily mean mortgage rates go down. In fact, last year, when the Fed cut the Fed rate 1%, mortgage rates went up almost 1%. Why is that? That's crazy. I can't necessarily tell you all the reasons. I will go back here, and it talks about how, so how are the mortgage rates set? Mortgage rates are determined by the mortgage bond market and lenders. Oh, the mortgage bond market. Well, let's hop over here. We talk about this every time. This is a mortgage-backed security or bond market right here. This tells us what's happening with mortgage rates. Let's pull up a 1-year chart here. All right. So all you need to know, as I've often said, is when green is good, red is bad, and the higher the security price, the better mortgage rates are doing. All right. So, oh my gosh, look, rates were getting better and better and better last year, August, September. Wow. Right around that time, September the 18th, the Fed cut the Fed fund rate. Wow. Well, security prices actually got worse and worse and worse, and kind of peaked here in January with mortgage rates hitting their highest level in a while. So, yeah. So all that to say, yes, do I hope the Fed cuts the Fed fund rate? Yes, I do. Do I hope that in some way it impacts mortgage rates? Yes, I do. Am I extremely hopeful that that's going to have any sort of major impact on mortgage rates? No, I am not. Okay, so you've seen the evidence here as clearly, like right when the Fed started cutting, mortgage rates started going up. Now, a lot of that I think has to do with the fact that it's considered potentially inflationary. And that's kind of the concern why the Fed's not cutting the Fed fund rate right now. They're afraid it will spark inflation. If it sparks inflation, then that means that mortgage rates will likely go up. So it's a complex economic market. All right, a couple more screens here real quick. As we get to the latest headlines, I just pulled up, searched on CNBC.com. Mortgage demand flatlines. It is pretty slow right now. Although my team, we've done about $4 million in loans, both in June and in July. We're pretty busy, so people are out there buying houses. A couple people are refinancing. Not many people are refinancing, but mortgage rates hit 4-week high. Again, if we go back here, we've talked about it, just how rates have just been very flat, only moving up 30, 40 basis points this year. Now, one last thing. I'm going to pull up a chart here from Keeping Current Matters. Oh, let's see here. Where are we here? Rate projections. All right, hang tight here as we pull this up. Let's see if I can make this any bigger. Okay, there we go. All right, so this is just a chart that's showing every few months Fannie, Freddie, Mortgage Bankers Association, lenders like Wells Fargo, banks like Wells Fargo will do projections for the future. These are the projections that are currently being put out by Fannie Mae, Mortgage Bankers Association, and Wells Fargo. What they're saying is rates may go down slowly. Lower, slower is what we say around here. Lower, slower. So this is going through the second quarter of next year. I hope they're wrong. I hope rates go down quicker than this. We don't even know for sure if rates going to go down. But these are what the sort of the best minds with the best data are saying to expect with mortgage rates. So, expect for the foreseeable future, we're going to be in the sixes. Maybe we move from the upper sixes to the lower sixes. But I think we're in for a, kind of a longer period of time where rates are staying in the sixes. Eventually, we'll probably get to the fives if we're lucky. But if you're looking to purchase, at least you can count on the fact that rates are steady. If you're looking to refinance, I would hold off. I think we just need to continue to wait. These rates are not going to do a lot for most people. So anyway, well, listen, Amy and I, Jesse, we're here to talk to you about your home purchase needs, where we can talk specific interest rates, we can talk strategy, however we can help you. Sorry the video is so long. Anybody that watched it to the end, congratulations. Give yourself a pat on the back for watching the whole thing. All right, take care. Bye-bye.